Building your investment portfolio is akin to painting a masterpiece, each asset a carefully chosen brushstroke. Join me on a journey where financial creativity meets strategic wealth growth, and together we'll craft your path to prosperity. Welcome to Everyday Elevate, where we help you boost your financial know-how. Crafting an investment portfolio is like mapping your financial future, blending strategy with foresight. Optimizing asset location for tax efficiency is key. Subscribe now for insights and strategies to elevate your financial game and pave the way to success. What exactly constitutes an investment portfolio? An investment portfolio is basically a fancy term for all the stuff you own in the finance world. But rather than just grabbing whatever comes your way, it's smarter to put together your portfolio with a plan. This way, you make sure your investments match up with your goals and you feel more confident managing any risks that come your way. Key components of a solid investment portfolio encompass diversified. Embracing a diversified investment approach involves spreading your money across a mix of assets such as stocks, bonds, and cash equivalents, and distributing them across various markets. This strategic allocation helps mitigate the impact of changing economic conditions or fluctuations in specific market sectors. By not putting all your eggs in one basket, you enhance the resilience of your portfolio and potentially reduce the overall risk exposure. Balanced risk-reward. Ensuring that the level of risk in your investments aligns with both your financial goals and your comfort level with risk is crucial. It's essential to carefully assess your investment objectives and your personal tolerance for risk before making any decisions. By doing so, you can construct an investment strategy that strikes the right balance between potential returns and the level of risk you're willing to accept. This thoughtful approach helps tailor your investment portfolio to your unique needs and circumstances, enhancing the likelihood of achieving your long-term financial goals while maintaining peace of mind. Cost and tax efficient. Maintaining a keen eye on the expenses associated with owning assets is paramount to preserving your investment returns. By keeping costs at bay, you ensure that your hard-earned gains aren't eroded over time. Equally crucial is minimizing the impact of taxes on your investment performance. Staying informed about how gains and losses are taxed, as well as taking advantage of available deductions, can help optimize your after-tax returns. By proactively managing both costs and taxes, you pave the way for a more efficient and effective investment strategy, ultimately maximizing the growth potential of your portfolio. Simple and easy to manage. It's essential to have a clear understanding of the role each component plays in your portfolio and why it's considered a prudent investment choice for you. Take the time to evaluate the purpose behind including each asset, considering how it aligns with your overall investment objectives, risk tolerance, and financial situation. By comprehensively assessing the rationale behind each investment, you can ensure that your portfolio is thoughtfully constructed to serve your specific needs and goals. This level of understanding empowers you to make informed decisions and maintain confidence in the integrity of your investment strategy. Constructing an investment portfolio can be broken down into 5 essential steps. These steps serve as a roadmap to help you navigate the complexities of the investment landscape while ensuring your portfolio aligns with your financial objectives and risk tolerance. Take into account your financial objectives. Are you aiming to secure a comfortable retirement, accumulate funds for a home purchase, or establish a financial foundation for your child's future endeavors? Keeping your objectives at the forefront of your investment strategy, address the following inquiries. What level of investment return are you aiming to achieve? What is your desired timeline for seeing returns on your investments, and what milestones are you aiming to achieve along the way? How does your existing financial status look? How do you plan to handle financial setbacks? Define your risk tolerance. It's imperative to conduct a thorough and honest assessment of the degree of risk you are willing to embrace in pursuit of your financial objectives. Your risk tolerance is typically influenced by several factors, including the extent of your current financial assets. When you have a considerable surplus of funds available for investment, you may feel more inclined to allocate a larger portion of your capital towards aggressive investment strategies. This comfort arises from the understanding that even if you encounter losses, your financial stability and overall well-being won't be substantially compromised. This ample financial cushion allows you to take on greater risk in pursuit of potentially higher returns, knowing that you have the resources to weather any setbacks along the way. Understanding the likelihood of positive returns on risky investments requires grasping market intricacies like trends, volatility, and catalysts. Novice investors may face emotional challenges amid losses, potentially leading to impulsive actions like panic selling. Cultivating emotional resilience and disciplined decision-making is crucial to navigate market volatility and enhance long-term investment success. The timeline within which you aim to achieve your objectives. For a long-term retirement fund, consider predominantly investing in broad market index funds to weather market fluctuations. They historically deliver consistent returns over extended periods. However, for shorter-term goals like 5 to 10 years, allocate more to high-growth equities, albeit with higher risk. Common asset classes that retail investors typically incorporate into their portfolios comprise stocks, commonly referred to as shares or equity. Stocks represent ownership stakes in publicly traded companies and serve as a popular avenue for businessmen to bolster their wealth over time. When a company experiences growth and its share price appreciates, investors realize capital gains, thereby increasing the value of their investments. Moreover, many businessmen's companies offer dividends to shareholders, providing an additional source of income and potentially enhancing overall returns on investment. Bonds, also known as fixed income assets, are renowned for their reputation as a low-risk asset class, often serving as a defensive mechanism to safeguard capital during periods of market volatility or downturns in other asset categories. Despite potentially offering lower interest rates compared to the expected returns on equities, bonds offer the assurance of fixed payments over time. Cash serves as a distinct asset class within the spectrum of investments, and it's a prudent strategy recommended by many financial advisors to allocate a portion of your portfolio to cash holdings. Beyond its safety, holding cash within your portfolio offers a multitude of benefits. By maintaining liquidity through cash reserves, you gain the flexibility to seize opportunities as they arise in the market. Whether it's acquiring new assets at advantageous prices or increasing your positions in existing assets during favorable market conditions, having cash readily available empowers you to act swiftly and decisively. Alternative investments. Alternative investments encompass assets outside conventional categories like stocks, bonds, or cash equivalents. These offer unique diversification and potential returns beyond traditional markets. By considering alternative assets alongside more traditional investment options, investors can build well-rounded portfolios designed to withstand market fluctuations and capitalize on a diverse range of opportunities in today's dynamic investment landscape. Some examples of alternative investments encompass real estate, commodities, cryptocurrency and NFTs, venture capital, and collectibles. After identifying the assets in which you wish to invest, you must then make decisions regarding the allocation of funds across various assets and the frequency of such allocations, the selection of specific investments or products for purchase, strategies for diversification within each asset allocation. It's worth highlighting that the majority of employed individuals typically have funds invested through their superannuation accounts. Therefore, it's prudent to take a moment to assess the allocation of your superannuation investments. By doing so, you can enhance diversification within your overall investment portfolio by selecting assets or markets that expand the range of markets or asset types represented. This thoughtful approach can help optimize your investment strategy and potentially mitigate risk exposure across various market conditions. Crafting an investment portfolio is akin to planning one's financial future. It starts with setting clear objectives like retirement or financial milestones, followed by assessing risk tolerance for alignment. Diversifying across asset classes, stocks, bonds, cash, is crucial for resilience and balance. Continual vigilance and periodic portfolio assessments are vital for staying aligned with goals. Beware of pitfalls like portfolio sprawl, which adds unnecessary complexity, and managing individual stocks alongside funds, risking added burdens and risks. Prudent portfolio management requires vigilant oversight of underperforming mutual funds and precise adjustment of asset allocations to align with retirement objectives. Asset location optimization, analogous to strategic placement in financial planning, enhances tax efficiency by allocating tax-efficient assets to tax-advantaged accounts and tax-inefficient assets to taxable accounts. To navigate complexities, consolidate accounts, simplify portfolios, and refine asset allocations for tax efficiency and performance. With focused attention and prudent decisions, overcoming these challenges leads to confident, stable progress towards long-term financial goals. Gain expert insights, practical tips, and strategic guidance to craft a tailored investment portfolio. Subscribe now to elevate your financial literacy and pave the path to prosperity with us.